Tim, good morning.
This thing up.
Good morning. Happy Monday, guys. So
Monday.
Nothing is happy
What's
today.
so
Tim.
happy?
Oh,
about it?
everything.
all
you're right. I've
unhappy.
got to stop falling for the platitudes, tropes, and cliches that typify Monday mornings. So, Dennis, it's funny. We came back from Spokane yesterday. So we didn't have groceries in the fridge, so we bought some Thai food, and we had the option to pay it in installments. I mean, that's speaking of a firm. The fact that you can buy everything from your Thai takeout to your furniture in installments is a remarkable thing.
That's crazy.
Yeah.
Tim,
Must
I don't know
have
if
a
you're
really
listening to the
big
conversation.
order.
We'll take it away from a
That's
firm
what
here.
I'm thinking too, Joel.
I want
did
to bring
you
it back
order?
to Apple because I want to see what the market. I want to see what Tim's market structure edge is showing on Apple here. I'm very concerned about Apple because it technically doesn't feel healthy to me. I'm so concerned about Apple, Tim. I've held Apple in my long-term portfolio for a decade, and I realized I sold a 25% of the position, which I never thought I would sell.
Wow.
But last week at 162, I was like, I'm too nervous about having my portfolio 13% Apple. So I lightened up. It had just grown into that. I bought it like a long time ago, and I'm like, I never wanted to realize the gain because basically the majority of it was gain. But I'm just concerned. And I don't like the technicals. It doesn't feel healthy to me. The valuation isn't cheap. And we're in an environment where they're hammering a lot of stocks, and they hadn't really hammered it yet. They're starting to hit it now.
Yeah.
What are the what's the market structure edge showing on Apple?
I bet you it's got to be like a 2 or a 3.
No, he's betting. I want not bias it. Well, it doesn't matter. It's a system, so we don't have to
market structure is predictive, so it won't necessarily reflect what you think. But I'm reminded, and there's always something that will trigger a thought for me, which I'm not sure is a good thing. But
He's trying. Tim's trying.
I laughed. It was funny.
I remind so because we were exhausted. We had this big. My mother had an 80th birthday bash, which we organized as a surprise up in Spokane over the weekend, and so we had a flight out of Spokane at 5:40 in the morning on the Sunday when the time change occurs. So I didn't get any sleep. So we got back and we're watching this old movie. Because I spent a year when I was in college in Sri Lanka, and so I'm pretty familiar with Southeast Asia. Spent a lot of time in Thailand, and there's this movie called The Killing Fields, which is an absolutely fantastic movie about wartime conditions, and it reminds me in some ways of Ukraine. And I have a point about Apple, Dennis. I'm going somewhere with this.
Yeah, okay.
And so there's it's got some really, and it's a true story. That's what I think makes it wonderful. And there's this point where clearly things are falling apart there. And you think about Apple as sort of the stolid mainstay, the thing that you could count on. And they're in what we used to call Phnom Penh, the capital of Cambodia, which became Kampuchea for 4 years, just a disaster. And this British character, a journalist played by Julian Sands, says to the Americans, well, what I'm hearing, and he's British, keep this in mind, what I'm hearing is the place to be is the French, the French consulate. and they said, well, where are you getting that news? And he said, from the British consulate. And keep in mind that he's British. So it's gotten so bad that the Brits are saying, no, hang out with the French. And I think in the markets, things are so bad that even the committed Apple folks are saying, well, let's go shift to energy, right? It's gotten that bad in the market. So let's go look at Apple. Maybe that fell flat, but if nothing else,
it's a good movie. All I know is
it's a good movie.
It
I'll
was
say one thing too,
riveting.
just on and this is just my recollections of talking with with Gene over the years and stuff. I mean, I'm not saying they're moving away from the iPhone, but I think that they hopefully they're looking to diversify their income stream. And I don't know what's going to be part of the metaverse or where they're going, but they're working on something. They're not just going to be that dependent on the iPhone. What that's going to do in the interim, with the stock down 1.82%. But I just wanted to share that thought. Go ahead, Tim. What's market structure have to say?
So, and for people new to market structure is the mechanics of the market. It's shifting your thinking from, well, what are the fundamentals of the business, their financial performance, their management, their long-term prospects, etc., or the technical charts, and it says, let's look at how the mechanics of the way that money gets into and out of the market affect prices. And before I get to Apple, here's a firm, by the way. And to your point, Dennis, so when it spends a lot of time above 5, this whole time above 5, the moment that it breaks below 5, you should leave. You could even say when demand begins to fall. So this is price, this line's price, and then the green section, that's demand. And when demand is above 5, it tends to be excess. And if it's at 10, wow, that's a momentum stop. So when demand begins to fall, you should beware. It will tell you what's coming. Market structure, the mechanics of the market will tell you what's coming. So if demand falls and supply increases, see, it's over 50% short, the likelihood that you continue to produce gains diminishes, and particularly if it drops below 5. And look what it's been. It's been absolutely miserable. The one time that it was ticking above 5 was right when broad market sentiment was at 7.5. Don't buy that. The broad market's already telling you the whole market's going to go down. Month-end window dressing. Passive money was getting rid of tech, and I think we need to talk about that. So it's been miserable, and it's still miserable no matter how much it's come down. You say, well, it can't go any lower. Well, sure it can until this equation changes. And there are points in time when change occurs. One of those is setting up this week, options expirations. That's when things recalibrate. And you could look at it after that and say, is money coming back into a firm? But until that point, and unless that occurs, don't do it. There's no reason to buy something because it went down 50%. That's not a good reason. Okay, so let's go look at Apple.
I just want to stop you there. I mean, that's such a good statement to say. And this is like human nature to want to get a deal. Right. And you coming out and saying there's no reason to buy something that just went down 50%, until you start seeing some life. And I mean, that's what people want to buy the bottom. They want to think, okay, Alibaba can't go any lower. Maybe we'll go look at Alibaba after Apple. But I mean, this is what human nature does. I mean, this is, when you start trading, every trader thinks the same thing. I want to buy on the cheap. I want to get a deal. And then you realize, as you get further in your trading career, that it's tough making money with buying stocks that are going down.
It rarely works out. It just, that's one of history's timeless lessons. Buying stuff high and selling it low is not a good way to make money. Time tested. So this is a 1-year look at the supply and demand in Apple. So once again, here's price, and we're just taking the closing price. And then the demand is the green line. And the more time stuff spends above 5, the better it tends to do. Things that spend a lot of time at 5 tend to be platform stocks, foundational stocks that the market rests on. Well, Apple was only below 5 for 2 stretches here between March of last year. So here in May, which was a tough time in the market, people really got hurt in May. That's where the momentum market ended. I've said this over and over here on Market Structure Monday, that we have returned to where the market was in May, same price right now as it was in May, because that's where the momentum market ended. Now, we'll find out whether we can get our footing again. The only other time that Apple spent any time below 5 over that whole period was in October or September, October, the transition last year. Also a tough time, also a point where the broad market was top. Now look at how the momentum has broken down. This does not look terrible, but Joel, to answer your question, it is a 4.2 and descending. So demand is below 5, not good, and falling still. And so you want to buy rising demand and sell falling demand. That's generally a rule. There are nuances to that. And then if you look at the supply side, the long-term trend in the supply side, short volume, the supply chain is producing too much and there's not enough demand. Well, what will that do to prices? It will deteriorate them. It's not horrible. I'd look at Apple and say, well, it's nothing like a firm. It's not going for 30 days at 1. It's not bad, but it sure isn't what it used to be. And so will it reset after options expirations and indexes recalibrate? That happens Friday, in and around. It can't all happen on one day. That's going to happen around Friday. Options expire Wednesday, Thursday, Friday. New options trade next Monday. We can talk about that next Monday. But it's not terrible, but you can understand immediately why Apple is not performing like it did before. And it may or may not have anything to do with the business fundamentals. It has to do with insufficient demand and excess supply. It's that simple.
So how do we know when to come in on something like this? Like, okay, so Apple, you wouldn't come on something like this. Is there anything, when you're looking here besides energy maybe, but is there, what do you like right now, Tim? Like where should we be putting our money?
Yeah, what you want to do, to me, 3 simple principles. Where is the money going? We can look to see where the money's going. What's best among the things where the money is going, and what's occurring around us? Are options expiring? Are indexes rebalancing? Is it an earnings season? All of those will affect the amount of speculation, which can disrupt the way the prices behave. So that's always the backdrop to me. So then for edge users, that this is the command central is the dashboard. Let's look across here and see where the supply demand equation indicates money is going. And it's not very good. I said this morning, there's either a paucity of trading opportunities or an abundance of misery, whichever way you want to look at it. But clean energy, there's one thing that has excess demand and at least constrained supply. So that's where you see right here. There are only 9 companies. It's a portfolio I set up, and I just put these components in here. But see how strong the demand side is and how reasonably constrained the supply side. It's not great, but look at it relative to cloud computing, where demand has just not been good for the last, call it, a month. And so if I look at clean energy, then what I'm going to do is, where's the money going? Now I want to find the best thing in clean energy. Well, frankly, if I looked at this, I'd say probably fuel cell. Now it's a very low.
Here we go again with the fuel cell and the plug power.
Gosh,
all right.
It's actually been holding up. He's right though. Look at the chart.
It's been great. So it's been above 5 since February 4th. It has outperformed the market, and it still has very strong demand. And heading into options expirations, supply is declining. Now that's not an absolute. There are exceptions to the rule. There's just a central tendency. That would tell me that generally money remains committed to fuel cell. I will tell you stocks that are below $10, that the data volatility is greater. There's higher risk in it. But if I'm looking at that, that's the kind of stuff that you want to own. You want to own excess demand, not excess supply. So that's one example. And it's, you could look at, where else is money? Unsurprisingly, energy still looks good. The energy sector has about 140 companies in it. You'd think there'd be a lot more than that. But in the national market system, that's the component. You said, well, there are 300 energy companies in Houston. Yeah, but they're not all in the national market system. So here, see, the demand curve is beginning to come down, but look how strong it is versus the axis of 5. The supply side's ticking up. It's not great. You're not going to go get, like you did, in the last week, stocks like NOV, used to be called National Oil Field Varco, not National Oil Well Varco, NOV Inc. One of the best performers in the market. Is it going to deliver the same kind of return? Well, no, you're at the kind of the top of the Ferris wheel. But that still tells me until we get to options expirations, money remains in energy. No surprise. There's no surprise that's where the money has been. But I'll tell you, it is tough to find good stuff. And all you have to do here is look at the demand side. All of these curves are just struggling even to get to 5. Well, it tells you that at this point, in all the great complex of regulatory accounts, retirement accounts, people are still backing away from stocks, and that's affecting the market. Now, will that change after March expirations, end of the first quarter? Could. I don't know. We're going to find out.
Tim Quas joins us every single Monday from Market Structure Mondays. His platform is marketstructureedge.com. And we were getting some questions, repeated questions in the chat about, can you get a discount? Spencer, get me a discount. Get me a discount. Okay, I heard you. I've gotten you a discount. And I'm going to put the code up on the screen right now. It's Edge Prep 20. Let me just put it up on the screen right now. Edge Prep 20 to get you $20 off your Market Structure Edge subscription. There it is. That code expires the end of this week.
Does.
So you have 1 week, 1 business week. That is, it expires, I believe, on Friday. On the 8th, that's the 18th. Yes. So that code EdgePrep20 from MarketStructureEdge.com. Tim, always a pleasure. Thanks for joining us.
Have a great week,
thanks.
you guys.
Talk
Good
to
to
you
see you.
again.